All right, let's do a quick video on Shopify. That's ticker symbol SHOP. That's NASDAQ and New York Stock Exchange, ticker symbol SHOP, Shopify. Let's do a quick update and go over this real quick. So basically what we have here is we dropped down and we lost support, as we talked about in prior videos, could possibly happen between Wednesday, Thursday, Friday. We knew that we had a lot of news coming out and we could look for possible sell-offs. And coming into Tuesday of this week, we started to get below this line. And we talked about this last week, that if we lost this line, then we'd be trading in these general ranges. So we were trying to get back up above here. We kept hitting this as resistance. What's support? Once you get underneath it, becomes resistance. So it started acting as resistance right in the say 26.36 range. When we opened this morning in pre-market, actually futures were positive and most stocks were up a little bit, maybe into this right into this zone a little bit. And then right as the markets actually opened, they sold off so fast that you actually have no candles here showing you the trip down. It's just an entire gap down. We immediately found a bottom in the S&P in the 3,500 range, which then coincided with stocks starting to find a bottom. Shopify bottomed right around say 2367 was where some wicks went. Body of the candle started to close and hold in the 24-24.15 range, and since then we have been viciously rallying back on most all major stocks, crypto, the entire Nasdaq, S&P 500, the whole thing. These things are, sorry about that. These things are rallying like crazy right back up right now. We've got a, call it a relief rally, if you will, or a bounce off of the lows. We are now, though, before anybody gets, too carried away with thinking it's time to make, all this money going back to all-time highs, we are right back at resistance. We have yet to bust through resistance, and hopefully we can at least hold this. If we could hold this range going into the close today and not get below, say, something in the 25.50 range, if we could hold there on Shopify and hold somewhere in the entire Nasdaq and S&P above 35.88, somewhere preferably around the 3600, 3620 plus range is kind of what I'm looking for, then not only does it set us up better for tomorrow, that even if we get just decent news or even just average news where it's just what we expected, we could rally off of that rather than crash deeper. That could be nice. But for somebody who's a little bit more stressed out, or maybe bought some lows or did some DCAing as best they could this morning, and they just kind of want out of these positions. I've had a few people message me that they're specifically holding Shopify and they wanted my opinion on what to do. They sounded a little bit worried about their position and how to feel about it, and that's fine. People who are not charting all the time or who are not watching the bigger picture, that's not, you don't have time for it, you have a regular job, that's totally fine. That's what we're trying to do, is help you have some sort of sense of feeling of comfortability as much as possible with the markets and the direction and what's going on. So we've had some people message us and say, hey, what do you think's going on here? I'm holding, X number of shares. I'm holding, 300, 500,000 shares, whatever, and this money is important to me, or I need this maybe sooner than later, or how do you feel about my overall investment? What moves do I make from here? If you have a longer term horizon, these should all be great prices to be DCAing. DCA as in dollar cost average. Continue to bring your price down if you have access to liquidity to do so. If you're all in and there's nothing you can do, but you have a longer time horizon, just wait. These things should, come back around at some point. I don't know how high your price is. You could tell me. I could go back and, show you where you're at with reality. Do not look at all-time highs that coincide with all this money printing that's been done over the last couple of years and think that everybody is guaranteed to go back to there. Will some stocks go back to there? Yes. Will some stocks go back, flip that, turn those old all-time highs into support and go from there? Yes, they will. But that is not guaranteed, and most stocks will never see those all-time highs again, maybe ever, or it might take 3 to 5 or 10 years to do so. However, things like Shopify that have been, way up there in price and are so far down, you can get a 2 or 3x before you even get anywhere near worrying about if you're going back to all-time highs. I mean, you get a full 300% gain on this thing from where it's at right now. You're still under $80. And we're talking about a stock that if you zoom out and you look back and you start going through and you say, okay, well, what did this thing do? Like, look how high up there that thing was. So you start going and you look and you go, okay, this thing was all the way up here at $180 just back in November. And you realize that you get a 3x and you're not even at $80. So now those things are very likely in the near future. Those things could happen over the next few months, just with a change in narrative, just with the war ending, or someone saying that the bottom is really in for the stock market and we're not going into recession. This thing will rally back to these numbers quick. It'll happen so fast, make your head spin, and you'll just be like, man, I can't believe I sold my position, or I can't believe that, I lost all this, whatever. So look at where you've been, look at where you've come from, have realistic expectations, and overall realize that now you're buying Shopify right now at these prices at cheaper than it was if you caught the March of 2020 COVID pandemic drawdown. And, that's a time where a lot of people were like, oh man, if I just would have bought when everything crashed for COVID, I'd have been, so awesome. Well, you're a couple levels below that now. And you go back and you look to what it is really at. And you're like, okay, back in 2019, when we had the first sell off, these are the levels you're getting at. And depending on what stocks you're looking at, some of them are back here on levels not seen since like 2016 to 2018. So in the grand scheme of things, a lot of things could be, not could be, a lot of things are at much better, not just valuations because they've crashed, but getting back to realistic, figures and realistic valuations that you can kind of say, hey, I'm buying now and, I'm looking towards my future. These are investments. But for people who are short-term trading and people who are paying attention to these levels, here they are for you. You know what I'm saying? Here's your levels. And you can go through them and you can see what you're looking at here on where you would drop to if you did lose, more levels, what to expect to find support at. And having these things in mind is nice because maybe you are somebody who doesn't mind spending more money, has it, doesn't mind even feeling like you're gambling a little. It's whatever. You've got a longer term horizon. Or, I mean, I've got friends who are just like straight up, I don't care about the stock. I don't care about anything. I just like throwing money in, trying to make profit and get out. I don't care what anything is other than when am I green. That's fine. That works for some people. But have some sort of sense of, what to expect and where things are going to help you out. That way, if you're on a job site and you take a look at some money and you go, okay, I got money to spend, and you take a look at some stocks and different ones are crashing and you go, oh man, what do I do? What's smart to buy right now? If you have this information in your head and you go, oh man, Shopify is way down, and is it going to go to $8 or $9 right now, and you see it around 17 or 18, and you see these technical analysis, you go, oh hey, there's a really good chance I'm going to catch support and a bounce on that 17 level because it was the entire peak from back in 2018. And since it was once resistance, it should now be support. And there's a good chance you'll get that. And you could then just, jump in right here and dollar cost average down as close to this. And there's a very good chance this is an area where you would get a strong bounce and at least come back up to some of these next trend lines that used to be support. Once you're below them, they'll flip into resistance. And, you just kind of go from there with a plan. But watch these levels and pay attention to your realities and, just kind of go from there. With a lot of stocks, you have to worry about the fact that they were only pumped by the fake money printing going on. Whereas Shopify was growing long before the money printer came. And it was making these runs where it just kept doubling itself up, coming up, consolidating, jumping a level, consolidate, jump a level. I mean, and literally, doing 1x, 2x, sometimes 3 and 4x, from this period of time to this period of time, this period of time to this period of time. So, that's kind of your levels. That's where you're at. That's my short-term update on Shopify. These are the levels that I would be, paying attention to and looking for, no matter what your plan is. Are you trying to dollar cost average? Are you trying to trade it right now today? Or are you trying to trade it this week, this month, the next couple months? these are your levels to watch for support and resistance, and this is what you'll get, confirmations and confluence from. If you want to zoom in on a higher time frame, you can see this. These technical analysis, they help. I mean, are they everything? Can you make them perfect? No, but they sure do help. Look at this line. I put this line here. I'm just some regular guy in his office trying to share some videos with you guys to help you out. I put this line here. I didn't look into some database and say, where's the line at for this week, and where do the authorities say that this goes? There's no authority on this. This is a technical analysis, and you need to figure this out and figure out what makes sense to you. But this line that I drew prior turned out to become, once it was lost as support, it became resistance, just like I said it would. And you continue to rally up to it and bounce off of it, and you can't get to it. And then even this morning, when we crashed and came all the way down, and you come back up and you're just going like crazy, boom, you stop here. And then, let's take something a little bit closer look at this. Look at this wick. Couldn't get the body of the candle in there, but the wick's going in. And look back here when you were pushing wicks and candles partially through, but then getting rejection. And then right here, you started getting to where you couldn't get quite to it. So like these lines matter. And the more that you lose them in one way or another, be it support and you tap and on the bottom, you might go through, or resistance and you tap, and eventually maybe you go through that way. But if you continue to get stronger and stronger rejections, and you're trending down away from them, then you could almost start to make a new trend line yourself and say, hey, this is a trend line I'm noticing. Click that in and see how much you get confluence from that, and if you're going to continue to trend down from there. As of right now, I would tell people what I've been telling them. Watch for this line to be resistance. If you manage to buy or dollar cost average into this dip this morning and you feel pretty good about where you're at right now, take some off the table. Maybe close the position and wait for a pullback. There's a very good chance that even without bad news, even with just average news or average anything, that you could get a pullback to here. Even in pre-market, you could get a pullback sell-off just to this 25.33 before any news comes out. And then if it's worse, come down here and hope this holds or it goes lower. Or if you get any decent news, come back up, hit, and maybe blast through, and then start turning this back into support. Another thing to watch for once you're above it, when you come back down, is do you start closing candles on top of it, not just wicking through it, closing partial candles below it. Those are not, strong positions to, rely on basically. But if you can start, creating support here, then you are looking at going higher. So if anybody has any special requests or concerns, or you want to tell me, what your position is or what your time horizon is in the comments, I'm happy to try to answer your questions specifically and give you as much help as I can with feeling more comfortable about your investment and the moves you're making. That's what I'm here for. I'm just trying to help some people out. I know these are troubling times for a lot of people, and for others these can be great opportunities to make the most money you'll ever make in your life, or possibly make some of the best purchases between now and whenever this market actually finds a bottom. Because then going forward, when you look back, imagine if you're looking back on something like this and you go, oh well, I remember this crash that happened way back in the day, and you're the guy who's buying at these much earlier stages. Look what it looks like in a big chart. When you squeeze these things down, you're just watching this, you're like, oh, look at all this craziness, and we're down here. Well, remember the guys who were dollar cost averaging and having rough days back here. I mean, this almost looks non-existent. You know what I'm saying? So just figure out what your time horizon is. Try to have a plan that makes sense for you. And, if there's any way I can help, if there's any certain angle you would like to see the chart from, be it a time frame, be it a certain amount of time horizon, just let me know in the comments, and I'll try to stay on top of the comments and helping people out as much as I can. Most importantly, remember, we're in a downward trend. We're still in a bear market, and we have not found a bottom that's been confirmed yet. So don't get too carried away with, just thinking it's up only now. But these could be good times to swing trade, and they could be great times for dollar cost averaging for your future. Stay safe out there, and remember, making it through this bear market is most important. Capital preservation.